What's going on, everyone? Welcome back to this Forex forecast. We're going to be covering a couple of different pairs that we're interested in or that we're already in for the week of April 20th through the 25th. Now, I want to start with Euro Japanese Yen just to highlight the amount of times that we've been scraping pips on these pairs. So I had called this one a couple of weeks ago around here, and as you can see, it did touch down our TP1, and then I said again it might do a retracement based on that leg because this area was support towards the 50%, and then from there you can consider shorting it again towards TP1, and that's exactly what happened. So there's something to be said about the amount of pips that people are gaining or missing out if they're not taking these setups seriously. But before we get into this analysis, I want you guys to do one more thing, and that's just like this video down below. It really does support this. It allows other people to also see this video as well, which gives them the opportunity to not only learn, but also scrape some of these pips, which in a time of Corona, not a bad idea to be making a little bit extra cash. So there's money in the market for everyone. Don't be greedy. Just like this video, comment your ideas down below, and we can get started with New Zealand USD. Now, New Zealand USD and New Zealand Swiss franc are pretty similar in setups. I've been talking about this one for a while. So we're at a critical zone, and what's happening here is we have a descending trend line on the weekly time frame. As you can see, we have a channel of this descending trend line. We have this monthly support that we broke through. We have this descending trend line that we broke through, and we're actually testing this descending trend line now, which also happens to coincide with the 50% of the monthly and the 61% of the weekly. So there's a lot of confluence for this particular area right here on why it would be showing a lot of resistance. So that's exactly why, if your entry conditions are satisfied, then it would be a great opportunity for you to short towards your TP1, which is this 127 fib of the weekly leg. Next is going to be New Zealand Swiss franc. Same thing kind of going on here. We have a descending trend line. We have structure on the weekly time frame. We have this all-time monthly low, which is and could give us a potential resistance. But what's happening here is this critical area is actually in confluence with, obviously, we have this structure, we have this descending trend line, and then we also have a 50% fib. So that's why there's a lot of confluence if your entry conditions are satisfied for this to be a pretty good short. However, the caveat for this trade is you want to monitor the previous all-time low area because this might be showing resistance. However, if you are at the all-time low area, likely is you're going to be at a break-even point anyways. So it wouldn't necessarily matter if you're taking that risk, because worst case scenario, you would be covering the commissions and swap charges from your stop loss being just above break-even. Next is going to be Euro New Zealand dollar. So you can see here we do have a continued bearish momentum, and my ultimate bias on this particular pair is going to be bullish. So we do have some resistance on TP1, which is this monthly resistance. I can see here we got structure. So we would be at this point certainly risk-free if the trade parameters were satisfied, and we ended up coming up here to this resistance area. And if it does show that there's a lot of resistance, what I would do is just close it out manually, wait for another swing low, and try to get up towards TP2. However, or I could just move it to break even, let it do its thing. If it goes beyond that, then great. If not, then I'm at least covering my butt and the swap charges and commission. So it's essentially a risk-free trade. However, I am a big fan of trying to take some money off the table, and even if this does hit TP1, that's still a 1 to 2 risk reward ratio, as you can see right here. So it's not terrible. Altogether it's a 1 to 5 risk reward ratio. USD Swiss franc for the next. This one we had called a while back ago, and it did end up going down, but we're still having some consolidation here. We are seeing some resistance on the support area, which is kind of doing like a reverse head and shoulders. So depending on how this turns out for this coming next couple of days, this idea might become invalid. So before I actually go into this, I want to make sure that it's still a valid setup. So for now, we'll go to USD CAD, and same thing here. We have some bearish momentum going towards our entry target. However, you can see that we are getting some support here, and if we go down to the daily time frame, we could see some significant support on this area right here, which happens to coincide with, as you can see, this 50% fib as well. So this daily structure is coinciding with this fib, which means this might be the area for us to enter. And if that's the case, we would be restructuring our risk parameters accordingly. So it would still be at that 1 to 3 risk reward ratio, placing this just below this area of structure, and we're going towards our target. But we want to make sure that our entry conditions are satisfied prior to entering, just like you should be doing as well. So we're going to be waiting a little bit to see what price is doing and how it behaves at this critical area, which happens to be the 139.51 area. Anyways, that's it, guys. This is the Forex forecast, once again, for April 20th through the 25th. Hopefully you guys have been following along, taking the setup seriously, and scraping some pips every single week. If not, be sure to learn how to implement these setups yourself so that you can start taking away a little bit of extra cash, especially in time Corona. Perfect time for you to be learning a new skill that pays you quite a bit. So that being said, I'll see you guys in the next video. If you guys do have any ideas for pairs that you want us to cover, please comment it down below. And don't forget to subscribe to the YouTube channel as well. I'll see you guys in the next video. Later. What's up, guys? I want to say thank you again for checking out this breakdown for this particular pair. And I want to ask you guys to not only like and comment on this video, but also go check out our MAM channel. We have a channel dedicated specifically for breakdowns of the pairs and positions that we're actually entering or were already entered. So if you are interested in just getting a little bit more supplementary information and understanding how we analyze the market, go check out that MAM channel. It will be somewhere in the description or in the bio above. So thank you again, guys. I appreciate it. Go check out the MAM channel, like and comment, and don't forget to follow us for more of these free analysis videos. Thank you again. Talk to you soon.